Well, welcome back. Time for the word on Wall Street. Top investors watching your money. Joining me right now is Advisor Investments Portfolio Manager Adam Johnson, former CEO of Tether and current co-founder of Smartmedia Technologies. Reeve Collins is here. Great to see you, gentlemen, this morning. Adam, I want to kick things off with you with a market that is cautious this morning ahead of what is going to be a big week. We've got, of course, earnings as well as the economic data. The big banks kick off the third quarter earnings season this Thursday, and we've got CPI and PPI, so the September read on inflation. What kind of a week will this be, and how impactful for markets, you think?
Volatile and wild.
Yeah, I think I agree with you.
And hugely impactful. I have a love-hate relationship with earnings because every 12 weeks we get to hear from CEOs and CFOs and they tell us what's happening. But when you think about it, having to come out every 12 weeks and talk about, whether you're reinventing your business for the next 12 weeks and on can be overkill. I think as we try to cut through all that noise, what we really need to focus on is what's the guidance as we look out over the next couple of months? 12 weeks, 24 weeks, 36 weeks.
But we've had some dire predictions about the
guidance. And therein lies an interesting point, because 30% more companies than usual have already lowered their earnings guidance for this quarter, which begs the question, is it already baked in? Have we already said, okay, we know that times are tough, it's going to be bad, so we've brought stocks down to their lows of the year? I'm actually optimistic. You know me. I'm always an optimist. But I think that we've actually brought the guidance down so far that we are setting the potential for an upside surprise.
Well, UBS is downgrading the auto stocks today. Ford is down about 4% or so. So I don't know if that has to do with earnings or semiconductor chips and this continued inability to get things on time. But, Reeve, we want to know where the growth is. And you're coming up with wallets, digital wallets for companies. The NASDAQ plunged 3.8% on Friday, a real technology-led rout. Big tech stocks down across the board this morning. What do you think that's about, and what are you hearing from the brands that you deal with in terms of the slowdown in growth?
Yeah, there's a lot of FUD in the marketplace right now. People are feeling this FUD, fear, uncertainty, and doubt. It's a term we use in the crypto space. And we're feeling it on a global scale. And what's causing that? Look, the war in Ukraine, COVID, tensions with China, unemployment, inflation, you name it, it's impacting the markets. It's really creating a lot of pulling back. The thing about globalization, over our entire lifetimes, it's been a key factor of economic growth. Well, that's shifting. The war in Ukraine is a catalyst for that to end. Yeah. And we're feeling that pain, that status quo is changing. But the bright side is the future is really going to be amazing. And I believe that a key contributor is blockchain and Web3 applications. And that's why when you say, where's the growth? Well, in companies that are pivoting to really lean into that, look at Facebook changing its name to Meta, Square Payments changing its name to Block. And so these companies are really going to lean in and participate. Nike, it acquired Artifact Studios, and so it's going to be a key player in NFTs and these types of Web3 applications moving forward.
How does the blockchain accelerate growth at these companies?
The blockchain will just enable more efficient transactions, and it's more about how the economy is moving forward. And think about the internet boom, 95 to 2000. Over $6 trillion of value was created. We're on the start of a Web3 boom. So over the next 5 years, there'll be trillions of dollars of value created in the public markets due to this revolution.
And you think we're at the same stage? Will it be that big as the dot-com revolution?
Absolutely.
Really?
Because now this is really the blockchain revolution. We've had 10 years of blockchain advancements, and we're finally at a point where we'll have our Netscape moment, where we'll have these killer apps where the average individual will be able to do things on top of blockchains based on Web3 applications.
Do you see it that way? And do you see valuations at attractive enough point to actually buy into what Reeve is talking about?
Oh, absolutely. Well, again, my whole thing's American ingenuity, right? The people and companies driving the world forward. And when I think of Web3, and weigh in here, Reeve, what I think of is the enablement of micropayments, so that whether it's consumer to consumer, business to consumer, et cetera, is that the correct way to think about it? And is that the unleashing of potential and growth that you're trying to get at?
Well, the micropayments is one small part of Web3. If you think about Web 1, that's read only. Web 2 is read and write. Web 3 is read, write, and own. The average individual will be able to own things and earn money on the web in ways never possible before. You've always logged into websites with your email address. You'll still do that in the future, but it'll have a wallet attached. So now you'll receive cryptocurrencies and NFTs, and you'll receive value for all your participation online.
You got to be able to trust that you want that wallet at whatever brand you're talking about. Do I want a wallet from a financial services company that I trust and I use, or do I want a wallet from any other brand? You're dealing with lots of brands, not just fintech.
Yeah, but at the end of the day, you'll have one wallet attached to your identity, and you'll have lots of different objects. You'll receive items from all these companies, NFTs. We've just scratched the surface on the use case for NFTs. People say, oh, NFTs are over, because that was just the simple use case of trading cards, basically.
Yeah.
But in the future, NFTs will be a very fundamental part of your daily life.
I mean, higher interest rates is really putting a crimp into lots of things, right?
Yes.
You are looking at that as sort of the North Star in terms of investing. How do higher rates impact all of this?
Well, there is a slowdown, but once the IPO markets open up in another 6 to 18 months, you'll see a flood of companies entering the space, and so then people will be able to invest in these type of Web3 and blockchain.
And by the way, I hope it doesn't take 18 months for IPOs. We haven't had an IPO in about 120 days, which is as long as it's been since 2008.
By the way, we'll probably see that show up in the bank's earnings, right?
Yes.
You look at capital markets under pressure because you haven't seen an IPO in the third quarter. That's going to show up in the capital markets business probably for JPM, BAC, all these guys, Wells Fargo, Morgan Stanley, Goldman Sachs.
Yeah, and we get those earnings this week. And by the way, the earnings are expected to be down about 25 to 30% year over year. And that's one of the reasons. You've also had slower loan growth. Yeah, it's going to be a tough earnings season for the banks. But as I was saying, it may be that we already know that. We've already discounted.
Okay.
I hope we have.
All right, we'll see. This is a great conversation. Reeve, thanks very much for joining us this morning. Reeve Collins, Adam, you're sticking with us. We appreciate that.